community practice has grown to more than 180 member organizations, more than 600 individuals representing nonprofit, academic, government, private organizations, really spanning the globe. The community practice has released a number of publications, and you see 4 of them here. They're all available online and excellent resources for green-gray infrastructure or nature-based solutions. Recently, we released the Coastal Green-Gray Cost-Benefit Analysis tool, and we're excited about providing an Excel-based tool to compare project alternatives using a triple bottom line approach. So please check that out. And we recently launched a policy working group focused on developing national policy guidance and resources for Green, Gray, and NBS. Please reach out to us if you'd like to participate in that group. But today, we're focused on financing and funding of nature-based solutions, right? RISCO, we're going to talk about today, which is our restoration insurance services company. And we're going to talk about lessons learned during the development of this project. And I'd like to introduce Elodie Warlencourt. She's a senior portfolio manager with Swiss Re Foundation. The foundation provided catalytic funding to support development of RISCO in the Philippines, and we're super grateful. So I'll hand it over to Elodie for a few moments.
Thank you, Rod. I'm very glad to join this recap on RISCO, this sort of lessons learning exercise, and let me tell you a little bit on our journey and why this is the case. So coastal resilience is really one of the 4 topics of the Swiss Re Foundation, alongside other activities in climate smart agriculture, disaster risk reduction, and access to health. And our work focus is really on nature-based solutions in coastal areas that have a triple impact. So on people, on the environment, and on sort of leveraging private sector solutions or funds. And our journey started only in 2017, essentially around support to the Nature Conservancy, the Mesoamerican Reef Repair Brigades, and that connected to an instruments mechanism to support restoration effort, where we felt, the role of a foundation like us, sort of to support a bit sort of earlier days of new solutions in that space. And we have sort of been supporting different actors, for example, AURA's Ocean Resilience Innovation Challenge to catalyze innovation, and some of its candidates as well, incubating and connecting early stage nature-based solutions. And really sort of in 2020, we approved also funding for RISCO. It has already received some support, right, from the Climate Lab that had helped outline the approach. And here we were really attracted by the idea to use an insurance-based incentive this time to support mangrove restoration. So not a bit sort of in the same thoughts that we had with the reef. And the really interesting hypothesis was that, right? And so our funding was to support the proof of concept until the first adoption of the model. And now 4 years later, this proof of concept pivoted several times. I think, the pathways have changed, recognizing the need to adjust to new learning. That's the case, that needs to be recognized in sort of very innovative approaches. But we are still to see a first life development deployments, right? So we're really committed. I mean, mangroves are among the most carbon dense ecosystems on Earth. They store 500 tons of carbon per hectare, so 10 times what forests do. And so for us, it's really an important part of solutions to address climate change, will come from mangrove. The question is really, how do we engage? How do we unlock some new sources of financing to support these protection, restoration, conservation efforts? So we've since then supported a number of other things. But 6 years later, as after having sort of started a bit that journey, we're reviewing our portfolio critically, and it's clear that all the team we supported did work a lot, very intensely on all these approaches. But we're not really seeing a lot of models that are not anymore relying on grants. None of them is yet at the point that it's scalable, that it's attracting private sector or government investment, that it's sort of scaling in size, right? Or it scales with more grant funding to do stuff. So on our side, the reflection is really that we need to sort of think about these proof of demonstration for scaling, looking at what we see. It's not just us. I think others are facing similar challenges. And it's really where it's of critical importance to create these exchanges like this one today, to share on what has learned, what has we learned, what has worked, what hasn't worked, and here you'll see that the team is still very much enthused and working together, and you hear from some of the learnings that can be shared from which other can profit from. And we really remain committed to the journey. And perhaps, one start of this conversation that I'd like to throw in is really that the nut to crack is not so much how to do the conservation or the restoration of mangrove. It's not how to do parametric insurance. It's not even to develop, data tools to monitor progress, but it's the connection of all these elements in a particular location that remains sort of still very much the challenge. Yeah, so that would be my sort of first remark as we start, and back to you, Rod.
Great, thank you, Elodie. Now, really well said. That was really kind of a great introduction into the work and some of the challenges that we're seeing really to kind of scale this work and replicate it. So thank you so much for that. We're excited to have you on the panel as well to kind of give some additional insight after the presentations. And so now we're going to move on to our presentation section of our webinar. So I'd like to introduce Romas Garbalauskas. He's the Vice President of Innovative Finance at Conservation International, and Ashwin Bagabatula. He's CEO of RISCO. But first, over to Romas.
So good morning, everybody. Romas Garbalauskas. I'm the Vice President at Conservation International on Innovative Finance, and I've been on the RISCO journey since its inception. And Ali Goldstein, who will be joining the panel, has been there with me during the whole journey as well. So Conservation International conceptualized RISCO first in 2018, late 2018. And the idea was to really have a financially sustainable enterprise, social enterprise company that would invest in mangrove health, improve mangrove health, generate revenues from blue carbon credits and from insurance products, because mangroves protect insurable assets, basically. And I'll get into the concept in a bit, but early on it was a highly innovative kind of concept. We saw a lot of potential, but we wanted to develop it and test it and see where we went with it. So we brought it to the Climate Finance Lab, and it was I think the one idea selected among something like 120 ideas that year. To be accelerated through the Climate Finance Lab in 2019. And that really, that part of the journey included the support of a dedicated lab analyst, and that analyst will actually be joining us in the panel as well, Sarah Conway, as well as the advice of an expert group, which included a lot of insurance experts from different insurance companies, both on the brokerage side and on the insurance side and so on. After about a 7-month acceleration process, there were a few products that were produced through the lab, and the most important was a 26-page in-depth instrument analysis. And based on that analysis, the lab endorsed RISCO late in 2019, and RISCO met the lab's criteria as being innovative, financially sustainable, catalytic, and actionable. On the side of being catalytic, the report stated that if RISCO was ultimately kind of put in place in the top 10 promising countries, it could generate between $360 to $500 million worth of revenues. So RISCO was to be implemented in 3 phases. The first phase was going to be the pre-pilot phase, and this was to select various sites and basically build a business model and get to the point where you actually had an investable business model in a specific site. So that's what we embarked on back in 2020. We first needed to raise grant funding to actually undertake the pre-pilot phase and the development of the pilots. So by early 2021, we had secured our initial grant funding from the Swiss Re Foundation, and several months later, we also were able to get funding from Convergence for phase 1, the pre-pilot phase in the Philippines. That phase has recently ended. So now if we could advance the slide, and I'll just quickly take everybody through what the RISCO business model looked like back when RISCO was endorsed in 2019. Next slide. So this is what the original RISCO business model looked like, and we're going to see as part of this presentation how this has changed. The original idea is you set up a social enterprise RISCO. RISCO raises blended finance. It then uses that blended finance in a particular site. So for example, you find a site of 4,000 to 5,000 hectares. Here we're targeting the Philippines, and you invest somewhere around $5 million over the next 10 years. Over those 10 years, RISCO then generates blue carbon credit revenues, as well as getting, in the original RISCO model, we actually had insurance companies paying RISCO directly a fee. And why were they paying that fee? Because RISCO, we were going to measure the flood reduction benefits that the mangroves were providing to coastal assets. So if an insurance company had insured, let's say, 10 hotels, coastal hotels, and we actually showed that the probability of payout was reduced significantly, the insurance companies would be willing to pay RISCO a particular fee for those risk reduction benefits that resulted from investing in improved mangrove health. The revenues were over a 10-year period. Net present value were meant to be greater than the amount of investment required into mangrove health, and therefore RISCO was meant to be a financially sustainable business model. So we embarked to do this in the Philippines. We picked 2 sites. We hired dedicated staff, and we tried it out. Just quickly, next slide, please. And I'm actually going to pass it on to Ashwin Bhagavatala to talk about where RISCO is today and what's happened over these last few years. But just wanted to quickly provide a summary of the challenges that were actually identified when we actually started out this journey back in 2021. The challenges that were identified at the time, and some of them have been actually the main challenges we've had to deal with and have to adapt the model to address, was the challenge of RISCO with needing to find potential sites where mangroves are located near high value coastal assets. So where the mangroves really close by and really providing those protective services to hotels, to major infrastructure, to major physical assets that were actually insured with flood risk policies. Second of all, was the challenge of actually generating enough insurance revenue. In the Philippines, there was government mandated premiums for flood risk, which were very low. So there is very little room to actually reduce the premiums on flood policies in the Philippines. Another challenge was that there was very little penetration of non-life insurance products in many emerging economies, including in the Philippines. And then in most places where there's more than one insurance company providing coverage for coastal asset owners. So there could have been a free rider problem where some insurance companies were paying RISCO, some were not, but they were all benefiting from the mangrove mitigation properties of the mangroves. So having completed our phase 1 pre-piloting in the Philippines, we can now speak to how these challenges manifested and our lessons learned in addressing these and other challenges. So at this point, I would like to pass it on to Ashwin to talk about where we have gone with RISCO in the last few years. Thank you.
Thanks, Romas, and hi, everyone. So this is Ashwin. I'm the founder of RISCO. I joined Conservation International to help them commercialize the idea. That's because of my experience with startups, especially in the insurtech and fintech space. So I joined them last year, and then I parted ways with them this year to start RISCO, because I think we had enough confidence for us to actually launch RISCO as a separate entity. So let me first summarize what Roma said and in terms of the challenges that we faced. Can we move to the next slide? So when we first started, the original model looked at indemnity insurance in terms of charging insurance companies for the reduced risk. Now, the problems that we faced with that was that there weren't enough high-value coastal assets near mangroves. And secondly, insurance companies, we faced a lot of resistance from insurance companies because premiums were already low and they weren't willing to pay for the risk reduction because of mangroves because they found it really difficult to quantify this risk reduction. In addition to that, a lot of the risk that the stakeholders wanted to cover was really difficult to model. So as an example, a hotel, let's imagine a hotel in a coastal area, and if there's a storm, maybe the hotel structure doesn't get destroyed, but there are a lot of losses in terms of revenues because of the loss of tourism or because of the absence of tourism. So because of all these, we moved to parametric insurance. Initially, we were looking at revenues from insurance companies and coastal asset owners for restoring mangroves. Now, we were set up two different entities. One was RISCO Insurance and the RISCO Fund. And the revenues were to come from the sale of insurance and from low interest loans. So how exactly this works, I'll talk about over the next few slides. Can we move to the next slide? Yeah. Okay. So how it works. So RISCO Fund is the main vehicle we use for undertaking community-based restoration work. So what RISCO Fund does is it identifies communities that take part in mangrove negative activities, and we train them and fund them to move to mangrove positive activities. Now, this fund has three sources. One, from the sale of RISCO insurance or from the sale of parametric insurance to municipalities, to villages, and to communities. Two, from impact investors who invest in RISCO for fixed returns. And three, through the sale of blue carbon credits. So maybe I can go through each of these funds separately, each of these sources separately, so you get more clarity about what I'm talking about. So can we move to the next slide? So the first source of funding is through insurance. So the way it works is RISCO works with different coastal stakeholders. This includes municipal governments, villages, small businesses, and individuals. We sell parametric insurance that protects them against either wind speed or excess rainfall. Now, the revenues that RISCO insurance make, about 50 to 70% of these revenues go into a fund. As I discussed, this fund identifies vulnerable coastal communities, trains them, and funds them to start mangrove positive businesses. In addition, because we're giving them low interest loans, they either adopt a mangrove for us or help us restore some area of mangroves. So can we move on? So there are precedents for this. So in China, there are 19 cities that are protected through parametric insurance. In India, there are several states that have bought parametric insurance from the private sector. And in Yucatan, actually, I think the coral reefs are protected through parametric insurance. Next slide, please. So specifically in the Philippines, we were working with a city called Puerto Princesa. So I wanted to kind of take you through what kind of issues the government faces. So in 2021, there was a hurricane in the Philippines. It was called Hurricane Odette. In the aftermath of the hurricane, the needs of the city were assessed to be about 7.83 billion pesos. The city government agency that is responsible for relief work, which is called DRRMC, or the Disaster Risk Reduction and Mitigation Council, had a budget of about 101 million pesos. They got in-kind donations of about 15 million pesos. And the rest, they had to rely on external sources like the World Bank, international governments, and NGOs to raise money. So our goal was to make these cities more self-reliant. Can we move to the next slide? So this is how it works in the city of Puerto Princesa. So every city in the Philippines has a city budget. So 5% of that budget goes to the CDRRMO, so which is the City Disaster Risk Reduction and Mitigation Office. So in the year 2022, that budget was about 170 million pesos. Now that is further divided into the Prevention and Mitigation Fund and the Quick Response Fund. 70% of that goes into prevention and mitigation, and 30% goes for the Quick Response Fund. This is in the absence of any insurance. So what we suggested to them is that if they put 5% of the prevention and mitigation fund into insurance, that would lead to a lot more in terms of the capacity that they have in term for disaster relief in the aftermath of a natural calamity. So that amounts to about 8.5 million pesos, and that would give them approximately between 150 to 200 million pesos in insurance in the case of a natural catastrophe. Can we move on? So this is the second source of fund, which is the through impact investors. And it's quite straightforward, where any investor with a conservation mandate invests in RISCO for fixed returns. RISCO then uses these funds to identify communities and helps train them and fund them. And yeah, so the investor achieves the restoration and community development objectives along with the returns that they get. Next. And finally, through the sale of blue carbon credits. So there were some challenges that we faced in the Philippines with regard to blue carbon credits, and we can probably touch upon them at a later stage. But we intend to pursue this revenue channel as well. Although the two pilot cities that we're looking at, we couldn't really do it because in one city there were some security issues because of which we couldn't really do the certification. And in the other city, blue carbon wasn't a viable business model. Next. So this is just to give you an idea of how the customer journey would look like for a city. So the city disaster risk reduction and mitigation office buys the parametric insurance from us. Then we work with them to procure the disaster maps, which show which areas of the city are more prone to natural catastrophes. Once we do that, we work with the city ENRO, which is the City Environment and Natural Resource Office, to procure mangrove saplings or propagules. We work with someone like CI to plan for mangrove restoration and green gray infrastructure to prevent or to reduce the impact of future weather calamities. When the natural disaster does occur, we pay them directly and they use the funds at their own discretion. So this is how it would work for a city. Next, please. So in terms of impact, we hope to add up to $50 million in additional capacity to recover from natural catastrophe. This goes to the cities, the villages, as well as the communities. In terms of training and funding, we hope to train at least 19,000 people in the first 3 years to start mangrove positive businesses. And the analysis done at the lab suggests that there'll be a cumulative benefit of more than 600,000 metric tons of carbon through avoided emissions and sequestration in the first 10 years. Next, please. So you've spoken about how it works for the city. This is how it would work at the community level. This is an example of what we did. So we trained a group of about 30 women who had no source of income to begin with. We trained them to start a seaweed farm. So this they did after they purchased RISCO insurance, parametric insurance. And then we trained them, and what we realized is they were able to generate enough revenue through the sale of seaweed to not only pay back loans, to pay back the loan, but also to take care of their family and to grow their business in the long run. So that's it from me. We have a small video and we wanted to show you. Maybe that'll give you better insight into this.
At Conservation International, we know that nature has superpowers. Mangroves are coastal forests that buffer against dangerous typhoons, providing $65 billion in flood reduction benefits annually across the globe. With the support of the Swiss Re Foundation, we set out to discover whether we could create a company that connected the protective value of mangroves to insurance in one of the most vulnerable countries in the world, the Philippines. First, we selected 2 pilot sites in the Philippines, Puerto Princesa and Zamboanga City. Both have people and economic activities along the coastline that are protected by mangroves, and both are vulnerable to typhoons. In December 2021, just as we were beginning to explore the RISCO model, Super Typhoon Odette hit the Philippines, affecting more than 12 million people and causing 1.82 billion pesos in damages. We visited sites in Puerto Princesa and Zamboanga to determine current threats to mangroves and opportunities to restore them. In Puerto Princesa, some deforestation is occurring as informal settlements pop up along the coast. Giving people more permanent economic opportunities could reduce pressures on mangroves. In Zamboanga, the main opportunities for mangroves restoration are in abandoned fish ponds, like the one shown here, which is now being used by a college for marine science. We began meeting with local stakeholders to understand how RISCO could support mangrove conservation and local economic development. We focus on designing parametric insurance products that are triggered by a certain strength of typhoon, providing fast payouts. These types of insurance policies can be designed for different customers: city governments, barangays, the local government unit in the Philippines, or small businesses. RISCO works with insurance companies to design these products, which can provide people with income replacement and governments with repair funds after a typhoon. A portion of RISCO's proceeds will go to a fund that provides training, grants, and low-interest loans to mangrove-positive businesses. RISCO Fund is the main vehicle we use for community-based restoration work. To do this, RISCO identifies vulnerable coastal communities, trains them, and funds them to start mangrove-positive businesses. RISCO works on the principle that healthier mangroves leads to a more financially resilient communities, and financially resilient communities lead to a healthier mangroves. RISCO Fund sources its funds from insurance, impact investors, and through the sale of blue carbon credits. To pilot this idea, we worked with Coast for Sea to train a women's group on a mangrove-positive business, seaweed farming. The women received propagules and learned how to plant the seaweed along a crop line. As part of the pilot, they also agreed to adopt a nearby area of mangroves and monitor it monthly. This pilot gave us an idea of how low-interest loans and community-based insurance could work within the RISCO business model.
Ako po si Michelle Ruiz. Nakatira po sa Aplaya, Tagporos, Puerto Princesa. Nagsasali po ako ng pagtatanim ng seaweeds ng RISCO. Tsaka dagdag kita po.
Oh, great. Well, thanks so much, Romas and Ashwin, for the presentation. I think we have a couple of minutes if anyone has some questions. Let's see, I see one in the chat. It says here, the revenue of US 50 million for 3 years looks quite nice. How much do parametric insurance providers charge you? So I don't know, Ashwin or Romas, maybe Ashwin, you want to take that?
Hi. So this the revenue, it wasn't the revenue of $50 million. The $50 million was the additional capacity for the city to recover from natural disasters. So that is basically the insurance cover that they get. The premiums would obviously be a lot smaller. And we have a revenue share agreement with the insurance providers. I hope that answers your question.
Great, thank you. Yeah, if anybody, if you prefer to kind of go on camera and ask your question, Kate, I don't know if you want to go ahead and ask your question.
So
hi.
Okay.
Hi, I don't know if it was this, Kate, but yeah, I was just interested in the private sector investors. This is a wonderful model. I've been working on something similar. So I was just curious if they could talk more about how they identified any private sector investors and what kind of data or portfolios they wanted to see before they invested.
So we had private sector investors, but that was for the feasibility study. And now we're in the process of launching, and we're also in the process of looking at funding. And I'll be completely honest, this is quite challenging. So we are looking at blended finance. So we're looking at convergence. We're looking at a few other grants or catalytic grants that can take us to the stage where we can actually go look at the private sector for funding. So yeah, so it's been quite great funding the feasibility study, but with regards to the business model itself, it's been a little challenging to find private sector funding for the launch and the operations.
Great, thanks, Ashwin. Looks like we have one more question here. I think we can do one more here before we move to our panel. There's a question from Roland about RISCO acting as an insurance broker. And that would mean your income is basically a brokerage fee and not having risk attached to that. Maybe, Ashwin, do you want to try to answer that?
Yeah, yes, you're right. It is, we would be an insurance broker or an agent depending on the country and its regulations. So yes, the income would be smaller than the premiums, but we have negotiated a slightly higher revenue share to make sure that enough money goes into the restoration work. But that also kind of, like you correctly pointed out, that kind of keeps us safe from having to pay out big premiums, which is especially important for a startup. So, and that the other reason why we are looking at a diverse source of funds, because we want to make sure that we don't just rely on insurance, but we rely on other sources as well, because we're working with governments and it's not always the most reliable source. They're often difficult to predict and they're not the best customer segment to work with.
Great, thanks, Ashwin. If there's any other questions, we can hold those till after the panel. We'll have about 10 minutes for questions at that point. So I'd really like to introduce our panel members now. So we're really focusing on lessons learned from our RISCO project. You've already met Ashwin, you've met Elodie, you've met Romas. So I'd like to actually introduce Ali Goldstein. She's the Director of Irrecoverable Carbon at Conservation International, involved with this project really from the start. And also like to introduce Sarah Conway. Sarah was the chief analyst at the Climate Finance Lab, really working on sort of the original concept of RISCO. Now she's the director and resilience lead at WTW. Great. So now we're going to open up to our first question. If our panelists want to all come on camera, that would be great. And so this first one, Ashwin, is for you. And so RISCO really seeks to strengthen community resilience by conserving and restoring mangroves. And we've seen information on sort of how this reduces risk and potential for blue carbon or carbon sequestration. So Ashwin, you met extensively with community members, barangays and municipal leaders. What did you learn and how did this shape the RISCO business model really from the community perspective?
Yeah, Rod, so please feel free to cut me off because this is a long answer, but yeah, I'd love to get into this. So I think the first thing I want to talk about is insurance. So in the developed world, the benefits of insurance are well understood, but when it comes to emerging markets, insurance is a lot more difficult to sell because people look at it as an abstract concept and they don't want to put money on the table for something that they might not really happen. So which is why it's called a push product, right? So our goal really was to convert this from a push product to a pull product. So this takes me to the second part of things. So when we started talking to communities, we realized that it's not like communities don't, or these vulnerable communities don't understand the importance of mangroves. But when there is no food on your table, it's difficult for them to prioritize mangrove health over their own basic necessities. So it often happens that these communities that are under financial duress will end up attacking their mangroves for the most basic needs. So this is where we wanted to kind of help uplift these communities, and which is why we always say that a financial resilient community is more likely to protect its mangroves. So when we started talking to these communities, one of the communities that we spoke to was called Cherish Fisherfolk Association, which is a group of about 60 women who do seaweed farming. So when we learned about their story, it was so interesting. Like it took them about 3 years to get trained to start a seaweed farm. They had to go to USA to get trained a little, then they had to go to the government to get trained a little more. And then finally, when they had enough training, when they wanted to get funds, they went to a local unlicensed money lender who charged them, I think, somewhere around 100 to 150% annually to provide them like $1,000 in funding. So we wanted to bring all of that under one umbrella. We wanted to make sure that we can provide training, we can provide funding at a reasonable rate. And also, a lot of these communities don't have collateral, so they can't go to a formal financial institute. So we wanted to make it easier for them to find access to this training and funding. So that's why we realized that it's not like one solution that fits or there's no like silver bullet. We need to look at insurance, which protects them in the aftermath of a hurricane, but we also need to look at how we can uplift these communities by providing training and funding for them. So that's how this whole business model came into fruition.
Excellent, excellent. Yeah, I think it's really interesting that we had one business model, and then once we met with the communities and really dug in, really looked at adapting to really meet the needs of the community members and municipalities. So I think that's a really interesting lesson and important one, really, to meet those needs. Elodie, this next question is for you, and so you come from an interesting position, right? Sitting in the foundation, one of the world's leading reinsurance companies. This is kind of like a two-part question for you. So what is the unique role that corporate foundations play in innovative financing? And from your perspective, what is the most important lesson here to help scale RISCO?
Well, thanks for that question. I guess a unique role, I mean, essentially we go in with our grant funding and different sort of projects, and we also enable sort of connection to Swiss Re expertise in area that in which there is relevant expertise, as well as to the network of the foundation over the business. In the case here of this project, we also had sort of Sherry Gray, the lead of public sector solutions in Swiss Re, as a lead on nature-based solutions to also accompany and provide some inputs on sort of the more insurance aspect of the project. I think corporate foundations can grant, they can support early stage non-demonstrated approaches for nature-based solutions. They can support multiple model. They can help, until one proves successful. And ideally they could accompany this demonstration with efforts to do share the lessons learned and do that in a way that is sort of broadly acceptable. I think it's a lot of actors in the philanthropic world like to sort of share the success stories, but it's also important to share when you're not quite there, sort of the accompanying this sort of mechanism of sharing around sort of lessons learned all the whole way. And I guess, on our side, we're looking at how do we generally improve these things, what is it that we'd like, to be shared in the end? Would it be successful or not? What sort of model? I guess sharing lessons is perhaps an easier one, but when it's successful, do you share a full financial model? Do you share what sort of information are you going to be sharing? So the grant can catalyze, can cover cost of developing, sustainable approaches. But one other aspect of that is really that we want to sustain projects that will be able to graduate out of grant. One of the things that we're realizing is that in doing that sort of financial model, we need to also factor in, what we'll need to also be grant funded, moving forward or replaced, right? So in doing this financial model, we really need to think about these things. There is currently not a lot of nature-based solutions, sustained without that grant funding. Yeah, one other aspect I wanted to mention is that what a foundation can do as opposed to a Swiss Re, we don't sit on the expertise, but what we can do is perhaps enable things that the business can't really do on their own because they're a regulated entity. And so we can go in things that a regulated entity could not. Finally, we've started going a bit on this journey to open for impact investing. It's not just grant, possibly we could even invest in some solutions. We're starting, doing our first step. I think we had in this project of also convergence, CI also has its own venture mechanism. I think all these vehicles are very important to support the innovation, just not in the exploration phase, but as it's going into deployment, very important aspects. Yeah, so just to conclude here, I guess, supporting collaborative blended approaches where there's a mix of different form of financing that is all working towards creating an impact, demonstrating the model and the type of impact, and stimulating a path of commercial sustainability for that solution is really what we'd love to see emerge. And we're thinking that more and more we need to work on what are the models to do that these type of demonstrations, what are the clear things we'll want to have, even if the path needs to change 20 times throughout the journey, because this is very, innovation. So that's the nature of it. It won't be a very straight line. But there's a clear thing that we want to see in the end, and that's the thing that we want to explore further in the next phase. Back to you.
Yeah, fantastic. No, I think that really illuminates quite a bit. Yeah, we're really hoping to see, right, sort of graduating, right, I think is the idea, right, out of the grants and finding financial sustainability, but it's really needing that support for deployment, like you said, is really critical to kind of keep this moving. But, I think even in some of your early comments when we first opened, you talked about sort of connecting, right, everyone on this. And really, I think the theme is really collaboration, right, to move this forward. And so there's a lot of pieces out there. We've seen other models similar, but yeah, I think that this collaborative theme is really important to really kind of get this to the next level. So appreciate your comments. So just kind of move on now to the next question. And this one, Sarah, is for you. And so really kind of given your former role as an analyst working for the Climate Finance Lab, right, and really developing the RISCO concept, and now your current role with W2W, we're really interested in your insights here for this. And so in the Philippines, we found that premiums for catastrophe covers are very low and not likely to be reduced by mitigating measures, right? And so as a result, there was a shift to the parametric model. And so can you address the challenges with parametric insurance, and could the mangrove risk reduction value be captured in parametric insurance pricing? More technical question, but anyone else feel free to jump in too. But first to Sarah.
Thanks, Rod. Yeah, thanks so much for having me to today's event, and good afternoon, good morning, good evening, everybody up there. Yeah, indeed, prior to joining W2W, I was operating as an independent consultant and had the pleasure and privilege really of joining RISCO early on its development during the design phase as part of CPI's Global Innovation Lab for Climate Finance. Needless to say, that was a really interesting experience that, we attempted to ground in reality as best as we could with inputs from a working group of experts, as Romas mentioned earlier. But, even I think what was perceived as theoretically, possible has, of course, proven rather difficult to implement in reality, especially on the insurance side of the business model. But, I really commend CI and those involved in RISCO for your perseverance and commitment, to really pushing the envelope of innovation and what's possible in terms of, the sort of sustainable financing of mangrove ecosystems. It's not easy, but yeah, really commend all of the efforts along the way. So to your questions, which, yeah, indeed, I think probably relate more to my current role at W2W than to my earlier involvement, but that's all right. So yeah, I guess quickly, I don't think we really necessarily covered what parametric insurance is. So for those of you out there that are less familiar with the term, and to avoid having you have to Google it and look it up, just quick reminder. So parametric insurance is a risk transfer solution that enables innovative coverage to address impacts beyond direct quantified loss. So they're designed to pay or trigger a pre-agreed amount to the policyholder when specific and measurable event conditions or parameters occur. So, for example, peak wind speed above a certain threshold in a defined geographic location and over a defined period of time. So before I turn to your question related to the challenges, I mean, I think it's worth pausing for a minute to just highlight some of the benefits that parametric insurance includes. So the first one I would say is broad coverage. So it has really opened up the potential to protect natural capital assets like coral reefs and mangroves, some of the programs that were mentioned earlier, that have really been previously uninsurable from an indemnity perspective. The second benefit I would highlight is transparency. Because it's based on and built on sort of independent, trusted, objective, verifiable data and pre-agreed payout amounts. It's a very transparent and easy to understand mechanism. Also, as a result of those things, the third benefit is fast payouts, right? So usually the payout, should a triggering event occur, occurs within weeks of an event, as opposed to indemnity. Sometimes that can take months, if not years, and it can be, rather expensive for that loss adjustment process. It's a pretty simple structure, right? It's easy to understand. It's based on a predetermined metric, such as wind speed, as I mentioned earlier. And, because the amounts are pre-agreed, those policyholders sort of know how much they would have in hand if a triggering event occurs, which enables them to better prepare a response plan or other interventions, again, should a triggering event occur. And finally, I would just flag that parametric insurance usually has unconstrained use of funds. So there's a lot of flexibility in sort of how you choose to deploy the payout in the case of an event. Though, of course, for the partners that we work with to structure these types of solutions, we always encourage them to have a good response plan or other, plans in hand to ensure that they can efficiently and impactfully deploy the capital immediately after a triggering event. Okay, so those are the, broad stroke benefits of parametric insurance. The main issue with parametric insurance is basis risk, which arises when the parametric solution doesn't perfectly correlate with the actual loss experienced by the insured. So, for example, the payout amount that you receive is lower than you would need to respond to that given event, or perhaps your policy is not actually triggered at all, despite you experiencing a loss. So typically this can be minimized or managed through choosing, appropriate data sources to underlay the index structure and sort of other aspects during the design of the policy itself. But ultimately, the insured does need to accept that there is some basis risk, and this is a sort of necessary trade-off in return for all of those great benefits that I mentioned earlier. So to your second part about pricing, so look, from a pricing perspective, parametric insurance is much more risk-based than indemnity insurance. It's essentially based on the probability of an event occurring. So while healthy, intact mangroves are, of course, extremely important, and they do help to mitigate and minimize the impact of an event, they don't change the risk of the event itself occurring, right? You're simply changing the implications of that risk. Put differently, if you have a strong mangrove ecosystem in place and you're confident that it would lessen the damage caused by, for example, a typhoon event, you could probably change the trigger threshold level, right? Or buy a lower limit. But the pricing would still be the same to the risk of the event itself occurring in the same way it is in the absence of mangroves, meaning that for the same level of coverage, the price would be the same with and without mangroves. This is, of course, not to say that insurance markets interested in underwriting these types of policies may not choose to offer more competitive pricing given the presence of mangroves. And given, the charisma and innovation and focus of something like RISCO, but this is likely to be driven by, more of an ESG or publicity angle than, any impact on the per risk price that the mangroves have had. Of course, in its current form in the Philippines, RISCO is essentially serving as an insurance agent. So it's able to secure a fee for facilitating access to parametric insurance, hopefully, at a competitive price. But it has, I think, this added benefit of helping to close the protection gap in a way that I think wasn't originally, considered during the earlier design days of RISCO. But it is nonetheless, I think, another really important challenge that RISCO is hoping to overcome as it looks to deploy this new business model. I hope that covers everything. Thanks, Rod.
Yeah, that was great, Sarah. That was great, nice primer in parametric insurance. I appreciate that. Maybe we kind of skipped over that a bit during the presentation, so definitely appreciate that. And so my next question is really around another lessons learned, right, that Ashwin highlighted. So Ali, this one's for you. And it was about the decision not to pursue blue carbon credits in the Philippines RISCO sites. So can you tell us more about the reasoning behind that and what we learned for future RISCO site scoping?
Sure, of course. So blue carbon credits were part of our original model. The intention was to use the sale of carbon credits to diversify the revenue streams for RISCO. And we did do site selection kind of based on sites where we thought blue carbon credits would be feasible. In the end, we weren't able to pursue this in either Puerto Princesa or Zamboanga. So I think it's really important to share some of the lessons learned from that. So what was interesting is that the reason for not pursuing it was actually different in each place. In Puerto Princesa, when we really went in and did the more localized data analysis, we found that the loss of mangroves in the last 5 years was lower than we had originally thought, which was, of course, great news for the ecosystem itself, but it wasn't enough to support a historical baseline of deforestation that is needed to develop credits. In Zamboanga City, we did find higher loss rates in recent years. As Ashwin mentioned, there's also 3,000 hectares of abandoned fish ponds in Zamboanga, and our analysis showed that if RISCO was able to restore even just 500 of those hectares, it could generate almost 60,000 purified carbon units at a value of over 2 million over 10 years. So from a technical perspective, this would be viable to develop a carbon crediting project. But there were security issues in Zamboanga. And this was sort of nuanced. It wasn't something that we were naive to. We increased security measures for our Philippines staff that had traveled to Zamboanga, but the main kind of threat is actually to foreigners that are going not to the city, but the risk is increased when you're like in a boat and actually going to the mangroves. So why is this an issue? It's essentially because to actually issue carbon credits, you need third-party verification, and currently the groups that do that are international firms. And so thinking through the whole process, we were not sure if we would actually be able to, to verify credits at the end with kind of the current state of the carbon market. So again, this is not something that we were naive to at the beginning, but it really came to a head when we thought through the whole process of what it would take to develop a blue carbon project in Zamboanga. We're hopeful that the situation may change in the future and that it may be viable, but it's a large upfront investment to actually develop a crediting project, and we decided not to pursue it at this time. So some of the key lessons learned, I'll mention 3. So the first is really about data sets. So we're happy to share kind of the specific ones that we used, if anyone is actually interested in doing this. But in the process of doing RISCO, the data sets on mangrove loss were updated in terms of coming up to more recent years and also being higher resolution. And that showed that the loss in Puerto Princesa was actually lower than we thought. So sort of an in the weeds point, but the kind of spatial data set that you use, we found was really important. The second is sort of the one I already mentioned, to really have kind of more comprehensive criteria in site selection for a blue carbon credit project. And we found that security issues were kind of an Achilles heel in Zamboanga that we could have kind of asked more questions about and thought through the whole process at the beginning. So that's an important lesson. And lastly, really, I think when we did find that blue carbon credits were not going to be feasible in either site, we did have a moment where we said, okay, this part of the business model is not going to work in these sites. Like, should we continue? And we did think about that carefully as a team, and decided that it was worth pursuing, kind of based on the insurance piece of the business model alone. And so we now actually have a RISCO model that is the one Ashwin showed, that that actually functions without blue carbon credits. So I think adaptability and flexibility, but also really taking a moment to pause and consider whether you should continue or not if something doesn't work, was a key lesson for us.
Yeah, thanks for that, Ali. I think it's important to note that it seems that the business model, will still work without sort of the blue carbon elements, but doesn't mean that blue carbon won't be pursued in other locations, including the Philippines and some other places that we're looking at. We've got a lot of questions. I had a couple of things for Ashwin and Romas, but maybe we can go to some of the questions in the chat. And I saw one about, I maybe go to the top, about potentially looking at engaging in Africa. And I think maybe a question could be, what are some other locations or geographies that RISCO is looking at? I can maybe, Ashwin or Romas, maybe we can both.
Yeah, I can speak to that briefly. So after endorsement, we re-engaged the lab to do kind of a global analysis. So in the original lab report, identified countries that had the greatest potential for RISCO, but then we engaged the lab to do another deeper analysis on that question. And so just to let everybody know, if you Google RISCO Climate Finance Lab, you'll find a dedicated page on the Climate Finance Lab's website. And that material is somewhat old. We do try to provide updated information. But one product there was kind of a global analysis regarding RISCO's potential in other countries. So, it's a bit dated, but some of that analysis should still be quite valid. But we are also, right now, we did receive funding from another donor to pilot RISCO, or look for RISCO pilot sites in India and Thailand, and we are actively doing that right now. We're pretty much at the point where we're going to actually select a site to do the pre-pilot stage in India. And then we also are looking at the other side of the world. Rod and I are currently exploring working in the island nation in the Caribbean of Dominica. And there we may actually also do something a bit different. There have been ideas that you could adopt a lot of the learnings from RISCO, not just to invest in mangrove health, but to look at watersheds and the benefits that the watersheds provide downstream, the risk reduction benefits they provide to insurable interests downstream. So Dominica is a site that we are considering exploring RISCO both for mangroves and for coastal and natural capital, but also for watersheds and watershed capital.
Great, thanks. Yeah, so exciting to see this work be explored in other geographies based on the Philippines experience. And so I see this question here, I think is interesting. And this might be, Elodie, you might be able to jump in on this, and maybe you addressed it a little bit, but I see it was from Kate. It says, pivoting is critical and almost inevitable. Were initial funders okay to allow pivot or any challenges there? So.
Yeah, I mean, I can sort of only answer for our part. I guess, there were other funders. On our side, it was very clear that it's not a question of not allowing it, right? So you can't stick with a plan if it doesn't work, right? You need to pivot. You need to sort of test with reality. You need to integrate the learnings from what you're seeing. And without this, you shouldn't even go into these type of very early stage, funding of new business models. So I think, yeah, absolutely, no question.
Great. No, thanks for that perspective. And let's see, it's another question I see here, I think is interesting. And this, Ashwin did talk a little bit about, so is this the question, another challenge of selling insurance in emerging markets is previous negative experiences with insurance offerings, even late or contested payouts. Maybe Ashwin, can you talk about you talked about a little bit of like some offerings, right, to kind of make insurance more attractive, perhaps?
Yeah, so insurance, this has been a problem. So I've worked in several emerging markets even before looking in the Philippines. This includes countries in Africa and South Asia and Southeast Asia. And this is a very valid point. People have a very negative perception when it comes to insurance and the fact that people won't pay out. And this is especially true when it's traditional insurance, because there's a lot of back and forth about whether the insurance company owes someone something. I think parametric insurance. So the first point I wanted to make was that parametric insurance makes that a lot easier, because both parties agree on what parameters they are, and those parameters are actually usually tracked by a third party. So you usually refer to some weather tracking system, and as soon as those parameters are hit, you usually automatically make the payment. So the payments are almost instantaneous. So that is one aspect of it. The other aspect of it is what we already spoke about, which is the push nature of insurance. So one is the distrust when it comes to insurance companies, but the other is just the absence of like the interest or the knowledge when it comes to insurance, and how there are competing priorities when it comes to emerging markets, and how they find it really difficult to pay for insurance. So I've always found it really easy to club it with a more interesting product. So in Africa, we've clubbed it with mobile recharge coupons. So every time someone reloads their phone, they get insurance. Then in other parts of the world, we've tried to club it with like their cable TV. We've tried to club it with loans. And I think this is done even in the developed world, right? If you want a mortgage, you have to buy property insurance, so on and so forth. So I think this is quite prevalent, and I think it's especially important in the emerging markets where there's very little awareness of insurance.
Great, thanks, Ashwin. That's super. Another question I see here is thinking about NDC commitments. And so I'm not sure who might want to answer this one, but are governments ready to invest in such schemes as RISCO, right? Or these insurance schemes, right, as part of NDC commitments? I don't know if anyone take a stab at that. I think it's an interesting one.
Maybe I can take a stab at it.
Sure,
I think when it comes to the governments, there were some examples that I showed where there were governments that were willing to work with insurance companies and buy parametric insurance from the private sector. I think it's really important to keep in mind what the motivation is for the governments. So if you just go in with an insurance product, again, it's going to be, especially when you're asking government for money, it's always going to be a very difficult conversation. So in our case, what we did is we tried to identify what their pain points were. So for example, in the Philippines, the governments were, there were a lot of communities that were displaced due to natural catastrophes because of development reasons or whatever. So we spoke, and the government was really struggling to find employment for these people. So we spoke to the government and we said that, okay, if you point us in the direction of these communities, we can train them and fund them to start mangrove positive businesses. In addition, they also had targets with regards to mangrove restoration, and we spoke to them about how we can help them with that. So I think you go in with a package and you talk about the entire how you can how the government is going to benefit by working with you. It makes for a more appealing case as opposed to just trying to go to them with insurance, which is a more dry conversation and which is a little more difficult to have.
Great, thanks, Ashwin. I really one more. There's a couple other questions here, and I had one I wanted to really pose to Romas. Essentially, is we mentioned India and Thailand, right? Kind of scoping this work there. Can you share some key takeaways, right, as you look towards piloting in India, what that might look like, and how we can, really use lessons learned from the Philippines?
Yeah, I think kind of one of the lessons learned is, so what we do here is, like I said, we raise a bunch of grant funding, from donations from Swiss Free Foundation, conversions, and so on, to get to the point of finding a site, developing a business plan in the site, and showing that you actually have a financially sustainable investment in that particular site. And so site selection, when we did in the Philippines, we did it as a desktop review, right? So you're balancing time and money into kind of how much time you spend initially. So this is the pre-pilot phase, but at different stages. And stage one is actually selecting the sites. So it's a real kind of cost benefit, trade-off regarding kind of how much time and money you'd actually invest in site selection. So in the Philippines, we did it just as a desktop review, and it was quite thorough, but it's still a desktop review. But what we discovered is that when we actually went to the sites, the amount that we learned by physically traveling and speaking to stakeholders was extremely valuable. We also didn't have, at this point, when we started in India and Thailand, we didn't also have the pandemic, and so we were actually able to travel. So the pandemic did affect things early on, but like I said, site selection was really based on desktop review for the Philippines. So for India and Thailand, we've invested a bit more of our kind of early stage effort and money to actually go, to do earlier stage site visits before selecting the actual sites where we're going to actually try to do the pre-pilot. And so what we have learned is a lot of kind of what was learned in the Philippines is when you go and speak to stakeholders beyond just the insurance industry and beyond just the asset owners, and you speak to communities and you really kind of understand kind of what their kind of perceptions are from both how mangroves protect them and protect their livelihoods, but also how they participate in mangrove restoration. You have a far better understanding regarding kind of what the disaster relief efforts are for that particular site, who actually finances that, which levels of government could actually be clients for this new RISCO kind of business model, more based on parametric. We haven't abandoned the original RISCO model as well. It could still work for indemnity insurance type products, reducing flood risk to insurable physical assets. But when you actually go in person and you both see that physically, where kind of whether or not there are high value assets in that particular area, that proximity between the mangroves and the higher value assets, and you actually speak on the ground to the insurance industry and get a deeper understanding regarding whether or not there is that strong connection between the mangrove health and the flood risk reduction to insurable assets. that really helps us determine much earlier on which business model we will actually be pivoting to. So those are some of the lessons that we've already been employing in our site selection process for India, and is similar to for Thailand.
Super. Well, thanks very much. Really appreciate that. Let us know kind of those lessons learned, how we're really applying them. Fantastic. So we're pretty much come to the end of our session. I want to thank the panelists. Thank you so much. I think it was great insight into RISCO and sort of the challenges and how we've overcome them and how we're going to be able to move this work forward. And hopefully RISCO can graduate, and we hope to be really launching in the Philippines soon and other geographies. So it's very exciting. So to all the sort of attendees, thank you for participating and attending and the great questions. If there are opportunities to collaborate on RISCO, right? Anybody here today listening in, please reach out to us or the team or our Green Gray Community Practice. Shoot us an email if you have some opportunities to either collaborate or invest. We'd love to hear from you. I want to thank you, Elodie, and Swiss Re Foundation, really for your generous support and insight on the project, and again to the panelists, and also to Convergence for also supporting this work. Thanks so much, and I hope everyone has a great rest of your day or evening, and take care. Thank you.